What's going on with my hair today?
All
Yeah.
right, we are live. You're gonna have to fix your hair a little bit later there.
I got the Fry thing going, Fry
Yeah.
from Futurama.
All right, we are live. Welcome back to the Mr. Rent to Own Homes show. I am Dominic Danino, aka Mr. Rent to Own Homes, and in this live, we're going to be talking about why self-employed buyers need our rent to own program. And today, I am joined on our weekly live here with James Brown, real estate agent, investor in the Denver market. So welcome back, James. How you doing, buddy?
Great. Just got back from working vacation, so in the saddle, trying to make it all happen again.
Yeah, I hear you, right? So it's the life of the entrepreneur, basically. You gotta go, make it happen, and that's a perfect segue uh, to the life of an entrepreneur and needing not be able to qualify for traditional bank financing, right? Self-employed people, entrepreneurs, gig workers, business owners, whatever you want to call them, uh, typically can't qualify for bank financing because the banks are finicky and have the rules, right? So banks want people that have predictable, reliable, steady income, right? And well, that's just not the reality for business owners.
Right. And there's
Right.
many more business owners these days, right? More people getting into the gig economy, starting their own businesses. COVID kind of exacerbated that, right?
Absolutely.
Yeah.
Absolutely, right? We've heard all these new terms have come out, right? What is it called? Quiet quitting and all this other stuff,
Yeah.
right? That people are like burned out from their job or their office job, anyways, right? And they want to go create something for themselves, right? They're tired of working for the man as, it's been perceived, right? So,
Yeah.
uh,
Yeah. Even
so
like
they want to go do
schools.
do their own thing, right? So yeah, they don't want to work for the man. They don't want to make them money. They want to make themselves money, and they want freedom, right? The ability to work from home from COVID kind of opened the eyes to a lot of people, right? Can I make this happen permanently? Maybe with the job that I have, or maybe not with the job that I have, because if they need me back in the office, that's going to be a problem. And I think that started to happen too. I've been hearing rumbles, right? So corporations want people in the office because corporations, and I've been there, they're micromanagers, right? They want to be over your shoulder, making sure that you're doing what you're supposed to be doing, right? And if you're working from home, they can't see you trying to do your laundry at the same time while you're working or whatever, right? Or if you got the TV or I don't know, cooking, you got the whatever it may be, right? So corporations, they want to micromanage people. That's just a sad reality, right?
Right.
Though during COVID, I think there were stats that people were actually even more productive when they were working at home because they didn't have to do the commute, right? They don't have to go to the lunchroom or drive outside to go get lunch and maybe not come back or come back late from lunch. You just got to walk over to your kitchen and cook up your own meal. You can be done in 20 minutes, right? You were scarfing out your lunch right before we got on here, right? So we can make it happen if you're at home. So
Yeah. Not
these things
distracted
that
by people walking by your cubicle or water cooler, right?
chit chatting about whatever, right?
Yeah.
So that's where we're at in this economy, right? And then the cost of living too, right? People have the side hustles, right? What's your people say get a side hustle. One, to increase your income. Two, potentially have a plan B in case you lose your job. Also, having a side hustle gives you some tax deductions too, right? So we know as entrepreneurs, there's things that you can write off as a business owner or entrepreneur that you can't as a W-2 employee, right? They won't let you write off your miles as a W-2 employee or They won't let you write off your business equipment, the computer, the camera that we might use, the microphone that we may be using. You can't write that off of your W-2, right? Because you're not attempting to generate any income from that, whilst entrepreneurs can. And so they use that as an opportunity too. So there are tax benefits to being an entrepreneur or having side hustle, legitimate side hustle. Let me qualify that, right? Because there are rules. There are rules, especially right now, right? We just kind of tax season, right? 15 was the last day to file the taxes. And so this also leads to self-employed people, right? And I put on my summary, it's like typically self-employed people need our rent-to-own program because they can't qualify for traditional financing. And some of the reasons is they're new to a business. They don't have regular business income. The other part is they haven't filed their tax returns, right? Either too busy getting this new business up and running, or you're just too busy because you're doing a million things, because you're being the customer service, you're doing sales, you're doing marketing, you're fulfilling the product, whatever it may be, right? And then they just kind of get amnesia or forget about it or delay it. Some of it is delay. They don't want to think about it. Oh my God, I haven't kept my books and records and receipts and all this stuff. And I don't want to go to CPA and have to compile that for all the last year because I hadn't done it each month as you should be doing it. And so for that reason, they can't go to a bank and get financing for a home.
Yeah.
Any other reasons you can think of?
Well, the write-offs is probably the big thing we should be talking about. It's great until you go to buy a home and you've been writing off absolutely everything you possibly can think of. Even if it's legit, you might be hurting yourself for being able to get a loan because it's reducing your overall income by those write-offs, right? So we often say you got to flip the switch on that.
Yeah.
Go ahead.
And well, I mean, the term I like to use, broke on paper, right?
Yeah.
Banks, you're broke on paper. You made $1 million, you gross $1 million, but you wrote off $1 million, right? And your CPA's job isn't, well, there's a disconnect, obviously, right? CPA's job is to try to get you to pay the least amount of taxes. And sometimes, their advice is say, let's write off that's legitimate and get you to pay the least amount of taxes, right? So if you gross $1 million, let's try to write off $1 million, so you're paying zero. Okay, great. But that doesn't help you when you need financing, when you need lending, when you got to go to a bank and ask for money, right? Yep. And obviously, most people don't pay straight cash for a home. They need some form of financing. Even if they put a significant amount of money down, they still need a portion to be financed, especially the way the prices are these days, the form of financing. So when you go to a lender, the lender say, yeah, great. Your gross receipt were $1 million, but you wrote off $1 million and you netted zero taxable income. So we can't qualify you with that, right? Now, there are newer programs out there on the non-QM side, but I'm talking about like conventional and FHA and VA. They want taxes reported on your income for at least 2 years. And whatever that net, and maybe add back a couple of little things like depreciation and mileage sometimes. But in general, they use that net income to qualify for how much you can finance. And most of the time, if you're grossing $1 million and writing off $950,000, then to them your net is $50K. Not buying much $50K these days on right income. I saw a stat. What does the average family need to? What kind of income do they need on the average for a family of 4 these days, right? And I was looking at it depending on state, varying. It was ranging from $175,000 to $400,000 a year in income. Yeah, it's expensive.
Yeah.
So when it comes to that, you're not going to qualify for much as a self-employed person doing the taxes that your CPA is, doing their job and telling you to do. So most people that encounter that, they think, yeah, I have the money saved up for my down payment. I made $1 million in their mind, right? Because most entrepreneurs aren't CPAs, they're not tax people, they're not lenders, they don't know what the lender is going to look at. They presume, yeah, I made $1 million in revenue or sales, whatever it may be. but they didn't net that much, and so they don't find this out until they go apply for a loan.
Yep.
They were all excited. Hey, I want that house. Yeah, we're ready. Real estate agent shows them around. Yeah, okay, we picked out that house. Good, let's go apply for a loan. Go to the loan, give them your tax information, and the lender says, you don't qualify anywhere near that. Now they're disappointed, but they want to buy a house. They're ready to go. So you as an agent, what would you do with that?
Well, if they've come to me with that information from the lender, that's the first step. We already know why they can't qualify. So I'm going to start looking at if they qualify for our program. So ideally, they've got some money saved up, 10% of the purchase price, and then we can kind of look at everything else, what their actual income is, make sure that they can afford the monthly, which is going to be, similar to their mortgage when they do get it. Look at credit scores, all that stuff.
Yeah, so we're going to vet them just the same way, right? Realizing that, yeah, we already know up front that their tax returns aren't going to show their net income like a lender. However, it's about having a conversation with that buyer and saying, look, we can still get you into the home today and basically buy you time to get this changed, right? To pivot on your tax return, have a conversation with your CPA and say, look, I need traditional financing, because when I get traditional financing, that's probably going to be the cheapest potential rate and payment that I could possibly get, right? Because traditional lending is a little bit subsidized, so you're going to get a better rate than if you do a non-conforming kind of product. Yeah. But in order to do that, you're going to have to report more income or less write-offs, right? So it's about having a conversation with your CPA or your tax preparer and say, hey, I'm trying to qualify for a loan or a mortgage. It's about $500,000, whatever it may be, right? I need to report, or I need to net more income. I need to show more income, right? And for the people that have not been reporting their income, or they get paid maybe tips, right? We know a lot of people that get tips in the service industry. So tips or anything that they may get paid cash that they're really supposed to be reporting, yeah, it will be time to start reporting, right? Now, we're obviously not the IRS and that we're going to police people, but as part of our program, we're going to counsel them and say, hey, you're going to have to do some of these things in order to get your exit financing. Otherwise, there's no end in the rent-to-own program, and we want people to succeed. So we want you to get your own exit financing because we want you to get your own loan, right? But you just got to go fix this for a period of time, and then once you're bankable or bank ready, then you can go apply for your loan and then basically take over the property and we move on our merry way.
Yep. That's how it works.
Yeah. Anything that I may have missed there?
I think you covered it.
All right. So who are other types of people? Let's say, you as an agent, right? So agents out there, right? You get paid 1099. You're not W-2. You don't get paid an hourly wage, right? An hourly rate. So you out there obviously would be a person that would qualify. Myself also, right? Any lenders out there, most lenders get paid 1099. They're not W-2 unless they work for some of the big box lenders. But if you're a broker or for a different shop, you more than likely you're going to get paid 1099. How about the real estate investors? Right? We know a ton of real estate investors, wholesalers, flippers. They're doing syndicators. They're doing all kinds of stuff. Creative finance. Well, that's another aspect, right? But let's set that one aside for a minute, right? Everything that generates income that either you have to report or it's not consistent, reliable hourly wages, the banks are going to look at you different than if you're a W-2 employee that has a salary, that has a title, that can get a letter from the employer say, yeah, Joe Borrower's annual salary is, $80,000 a year divided by 12 months, and that's your monthly income, right? That's how it's qualified. But you have varying sources of income, or you write off a lot of stuff, right?
Yeah.
Syndicators pitch to people to invest and say, hey, offset your W-2 wages with passive losses, right? And that's a little bit more of an advanced strategy. offset your W-2 wages with passive losses through being a limited partner in a syndication, because we as investors in commercial property or multifamily or whatever, in some version of commercial property, we get to depreciate the asset over time, and then that carries forward to you individually, and you can use that to offset income. Right, so that's a strategy that people use. That's good. Yeah, but if all of your income is coming from that, and there's no W-2 wages, or if you're not set up potentially like an S corporation or a C corporation where you pay yourself a W-2 each year, right? Each year where you have to pay FICA on your W-2 income, then lenders will accept that. But most people are trying to pay the least amount, so they're not gonna pay themselves a W-2 wage that's super high, right? There's a couple of tax strategies out there that kind of use a method of a certain percentage of your overall. Some of it you take it as W-2, some of it you take it as distributions, because distributions aren't taxed like W-2 wages. So anyways, so those are some strategies, and those kind of hold people up.
Yep.
Right. So talked about investors, agents, lenders, all the gig workers, right? You have people driving Uber, right? Delivery, food delivery, right? You got all kinds of methods. How about the influencers, right? The influencer economy, right? People, how do they get paid? Influencers, either partnerships on their Instagram, or YouTube views, right? Or what do they call it? The partnership, or the YouTube partnership program, where they pay you based on how much views and followers and all this other stuff, right? So they pay you 1099. You're not getting a W-2. So how do you declare that income? You got to declare it. So it's usually going to be on a Schedule C, or if it's a significant amount, your CPA should be telling you probably set up an S corporation, so that way you're set up correctly. We won't get into the tax stuff, but generally, right, those that's not predictable, reliable income that banks like to use. Now, they have a method to look at that based on your tax return. So that's very popular these days. So influencers, gig workers, hell, anything, right? Anything. I think I was doing my run this morning, and I saw a guy that had about like 6 or 7 dogs. He was walking 6. Like, I can imagine they were all his dogs, but you've seen it, right? It's like dog sitter, right? You got dog sitters, and you got all kinds of stuff these days. It's funny to think about it, but it's just true, right? So all kinds of non-traditional methods or ways that people get paid. They get paid through PayPal, Cash App, Venmo. What's the other ones? PayPal, Cash App, Venmo, Zelle, right? So you got all these methods, right? And because hey, I did a job for you, pay me through that. Well, if it's income, you have to report it.
Yeah, anything over what, $600 a year?
Yeah, well, technically, you're supposed to declare all income, right?
Right. Yeah, exactly.
People don't do it because you won't get issued a 1099, and there was a law that had been passed that they were going to start implementing that and so forth, right? I think that did take effect. Did take effect in 24, where these companies are going to start issuing 1099s. So the IRS is going to know that you got money through some of these methods, and you're going to have to do something with it. Either explain, oh no, it was my buddies, sending me money because I paid for lunch, versus, oh, this actually was income, right? Because I don't know, mowed the lawn, or I walked somebody's dog and they paid me or something, right? So all these methods that you really people are required to report on the tax return, right? So, but there's an advantage, as we talked about earlier. Self-employed people, business owners, you can write off a lot of stuff too. So, but if you're not netting much, you can't use that. It's not going to help you in qualifying for financing for a home. Yeah. Let's see. Any other people that would you consider self-employed? Right. Tip people, service workers, right? If you're a server, bartenders, right? Adult clubs, right? Those people get tips, right? Entertainers, right? People get they got to report that income for qualify. It's got to be on the tax return. So
Yeah.
I know I've had a few inquiries from a couple of people that are in that industry, and the reality is like, hey, you got to start reporting it or put it on your W-2. Can we get you to a home now? Sure, but in 2 years, are you willing to go ahead and go through that process and start declaring it and paying your taxes on it so it shows up on your tax return so you can get traditional financing? If not, then that's a different conversation. Generally, we will say you're probably not going to be a fit for us, right? Because we need you to eventually exit. Could it be 2, 3? It could even, it could be a longer period of time, but there has to be a plan to exit the program by you doing something to get you into traditional financing.
Just had a thought. So, like, I'm in Colorado. There's a lot of marijuana growers.
Ooh.
I'm actually not too sure how things have changed from a lender's perspective. Where are we at with that? How can we help them?
Yeah, because so the issue with that is, right, so it may be legal in different states, but it's not federal yet, right?
Mm-hmm.
So I don't know if you saw the news, right? There was that story where there was a cash house or a cash safe house where dispensaries, they get paid in cash or they collect cash, right? But they got to they can't put it in a federal bank.
Yeah.
So they store it. And apparently, I guess somebody stole that money from that cash house because they cannot put it into a federal charter bank.
Oh, so it was like a home that they were using as like a
well,
bank?
It wasn't a home. I mean, there are a couple that are more like let's say like a storage location that's a safe, right? Like a big bank vault.
Yeah.
Right. And then they store the cash in there because they can't put it into a bank.
Yeah.
And apparently some people kind of, I don't know, apparently they think it was an inside job. Somebody walked away with a big chunk of money from that. But leading back to your original question, I have a couple of programs. And for those of you who may not know, I'm a broker, so I have different lenders. I have a couple of programs or lenders that will allow you to use your income if you're an employee of a dispensary, right? So if you're working the cash register or you're an employee, you're not an owner, you're not an officer of the company that is doing the dispensary work, then they're separating those two people, right? So you're an employee, then and you're getting paid W-2, then yes, your income can be counted and you could qualify, right? But if you're the owner, or you're a part owner or officer and you're generating income from that, then that income is not allowed.
If they're an LLC, that wouldn't work. But if they're an S corp and they are their own employee,
the S corp is going to tell you who are the officers, right, of the corporation, who owns it.
So
right?
they're not.
Nope.
And they're most
only
likely
employees.
Buy a house. They're probably the higher income earners that can, but they can't get a freaking
they got a lot of cash.
Mm-hmm.
They got a lot of cash. So that I mean that sort of turns into it's with the term that's used as shoebox money or mattress money, right? Because they can't put it in a bank.
Yeah.
So it's stored in these vaults, these cash vaults.
Yeah.
So that could potentially be somebody. However, that could get tricky because they may never get to get traditional financing. We can do a different creative version of that, right? Where we can just say, hey, you're just going to make us payments for 30 years, right?
Yeah.
So we'll just seller finance it to you for
seller
30
finance.
years.
Yeah.
We'll do some kind of creative, right? So financing, land contract, CD, bond for deed, right? So some version of that, right? Where they have equitable title until they pay us off, right? So they're basically almost a seller finance, right? Yeah. There's varying depending on the state and so forth. So could we theoretically do that? Sure.
Yep.
So, I think the only challenge I foresee is, we collect money in cashier's checks, right? We're not collecting. I would be hesitant to say somebody comes in with a bag of hundreds. It's like, yeah, I'm own a dispensary, but I had it all this stack of hundreds. Will you take this as the down payment? Like, no, because I gotta go put it in the bank, and then the bank's gonna start asking me questions. Where'd you get this money? So that may be tricky.
Yeah.
That may be tricky, right? Could there be a solution? I haven't had a client in that situation, but potentially, hey, that could be. No, we could probably dig a little deeper into that if we did run into somebody. Say, hey, how do we do this? Make sure that everything's on the up and legal and so forth. Because I'm not willing to lose my license if something is not on the up and up. So yeah. We want to make sure that the funds are not illicit funds, right? And that's why things are done. Hey, go put the money in the bank. The bank is going to do their investigation where the money came from. They're going to file their forms. If the bank's okay with it, then the bank is going to say, yep, the money's good. And then when you pay us, or you're going to use the money for the down payment, then you're going to get a cashier's check from that bank. And then that bank is guaranteeing, hey, that money is good. And then we can move forward, right? That's the way to kind of make sure that it's all on the up and up.
Yep.
Right.
Yeah.
So we're not in the business of investigating whether your money is legit or not legit. It's, hey, go put it in a bank. If it's legit, it should be fine. And then the bank can issue you a cashier's check for whatever you got to do, whether it's a down payment or make monthly payments or whatever it is.
Yeah.
Anything else? And so yeah, definitely. I mean, right? New economy, right? That's one. That's a prime example of something that's out of the box, that's new, right?
Yeah.
We're talking about influencers, or what's new these days. Influencers, dispensaries, or marijuana industry. Yeah. Absolutely.
Yep.
Let's see who else. Let me move further into the self-employed, right? So I'll give an example of a client. Most people think that rent to own is just for people with bad credit, or quote unquote broke people, right? Or the bad credit, no money, no job, or whatever, right? That's definitely not what our program is. And 90% of our clients are not that, right? They have money, they make money. It's just that they haven't either been reporting it accurately, or haven't done their taxes, or there's something along the way, right? So we had an example of a client that who owned a construction business. Construction business made good money, right? But as you know, right, entrepreneurs or business owners, they just don't have one business, right? They get involved in the multiple businesses, right? Oh yeah, I'm doing this, but I'm also doing this, and I'm also doing this, and I'm also doing this, and I'm also doing that. Yeah. Right? So that happens, right? And so sometimes they get into partnerships with other people. Hey, let's partner up on that business. My business, I own 100% here, but let's partner up on that because that sounds good. And we get into it, and maybe it doesn't work out, right? So we had a client that owned a construction business, made good money as a construction business, got into a partnership on another business with somebody else, and then that individual partner was embezzling money from that business, right? And so now you're embezzling money. Who's going to pay the bills? So the creditors start calling him too, right, with his partner, because they're both together on it. So the creditors start calling and trying to collect money on that when the other individual embezzled the money. So obviously he's got to make a decision. He's got a decision to make. Am I going to pay those creditors for the money that was stolen, or am I going to do something else? Well, they went to an attorney, obviously, to kind of get advice. That's what you should do. So they ended up going to a bankruptcy attorney. The attorney told them they should file for bankruptcy for that business. So that way the creditors stop calling him. That business goes under because of that reason. His business isn't impact. His original business isn't impacted, right? And those creditors should stop calling him. Now that bankruptcy is going to show up on his credit report, right? So he wouldn't be able to get financing, traditional financing, because it's still going to show up on his credit report.
Yeah.
But it doesn't mean that he doesn't have a legitimate business or a good business that makes good money. They can, and that's the kind of person that we can help, and we did, right? So yes, your income on this tax return is great. You got money, you're going to put a down payment. We know that you can make the payment, but you had this hiccup here because you got involved with somebody else and we got documentation for that. It's like, okay, you're a perfect fit for our program. Now that bankruptcy over time is going to drop off, or you'll be able to get traditional financing after either 2 or 4 years down the road once that bankruptcy has aged, because traditional bank financing requires a period of time since you filed for bankruptcy.
Yep.
So self-employed people, right? You're doing a bunch of stuff out there, so it's not just your income, but the stuff you get involved with on the side that may have thrown a hiccup into your credit. Right?
Yeah. That's good example.
Any other ones that you've encountered?
One that always jumps out at me is the agent that we helped. He just needed 2 full years. He was able to just a quick snapshot. So he wanted to start investing as well. Picked out a duplex. So we bought a duplex for him. He lived in one side, and within a year and a half, he was able to buy it. And he actually walked into enough equity because of the increase in the market during COVID and his actual lower price to purchase. He walked into a bunch of equity and was able to buy a single family home as well, all within a year and a half. So
that's a perfect scenario for somebody, right? It's like, hey, I couldn't get financing, but if I would have waited until I could, then I would have missed out on this opportunity because this was the right house, the right location, and so forth, right? And the advantage of potentially being able to participate on the upside of the equity appreciation. Right? This program isn't just you just get a house, but you get an opportunity to participate in the appreciation of the property. Right? So we've had many of people that have walked into that situation because we were able to lock in a price now instead of waiting down the road when that price could have been much higher. All right. Well, in conclusion, anything else you want to add? Any final thoughts here?
I think we knocked it out of the park with that one. If anybody has questions, they can reach out, of course.
Yeah, absolutely. Let's check. Okay, so we had no questions, but that's all right. If you do have any questions, how can I get a hold of you, James?
Linktree/partner with James Brown.
All right. Well, you got it there. And to get a hold of me, I am Mr. Rent to Own Homes on Instagram and on YouTube and on TikTok. And also my information is in the bio here of this live. Plus, or you can go to our website for our Rent to Own Homes program. It's at rent2ownhomesus.com. And you can see it on the banner of the video. Otherwise, until next time, we'll see you then. Bye-bye.